Hi, I'm Nolan Baker, owner of the Retirement Guys Formula. Thanks for taking some time to tune in today with us. We are going to be going over the investment methodology and process that we use with our Growth with Kings portfolio. This is what is referred to as a tactical growth portfolio. So the Retirement Guys Formula is located here. Our headquarters is 1700 Woodlands Drive in Maumee, Ohio, 43537. Phone number is 419-842-0550. And you can always get additional information about us and our firm online at retirementguysformula.com. Here's our disclaimers. If you'd like to take a minute, you're more than welcome to pause and read through all of our disclaimers, and you can find out how you can get additional information regarding our ADV and or SEC information. So the overview of the Growth with Kings portfolios, this is a tactical portfolio with an objective of long-term growth. And that's really kind of in opposition to what is referred to as a buy and hold strategy. So the word tactical means that roughly about 40% of this portfolio, we have the ability, where based upon how we look and how the outlook of the market is, we have the ability to make changes to the portfolio. So we can go more defensive all the way to be able to increase kind of our defensive cash or fixed income position if we feel the outlook on equities looks a little bit rough or a little bit risky in the future. We also own a diversified set of asset classes, ultimately to kind of help achieve that goal, meaning that we typically are going to invest into large, medium, small, and international asset classes. And many of the investments that we would own inside of the portfolio are going to be exchange traded funds, mutual funds. It could be individual stocks and or derivatives or cash within the position. The risk score currently, as of the date of this recording, which is March 16th, 2022, is a risk score of 52. So I would place that in currently the moderate position. Our risk score is generated from the software called Riskalyze, and this number is based upon a level of potential downside risk management. The risk score ranges from 0, being the lowest risk score that the portfolio can be assigned, all the way to 100, which would be ultimately the highest risk score. So 52 is kind of middle of the road, which again is why I would refer to it in the current position as a moderate. The number is going to vary based upon, again, our holdings and, again, based upon our tactical position and our outlook in the market. So, one of the ways that I think about that risk score is if you think about like a gas pedal. So 52 is like driving 52 miles an hour. This particular portfolio at 52 miles an hour, if you were driving that in an automobile and you had an accident, at 52 miles an hour, it still is a portfolio that you could get hurt in. It has growth as one of the objectives in the portfolio. At the same time, as we believe economic conditions look good, we can put the gas pedal down, maybe increase our score into the 70 miles an hour range. At the same time, if economic conditions really deteriorated, what we could do is we could let off the gas pedal a little bit more, maybe bring that risk score down closer to like a 35 or 40. Also, keep in mind that as you're looking at the different portfolios that we manage here with the Retirement Guys Formula, we also have a Dividend Kings portfolio that's even a little lower risk than this. It's considered our moderate with Kings. And then we also have another portfolio that's even more conservative. Again, it's called our Conservative with Kings portfolio. So the methodology is similar. It just, again, depends upon what level of risk you're willing to take and the overall objectives of that. When we talk about the portfolio management, again, what we're going to be doing is we're looking at market conditions, and we can either opt for more of a defensive or more of a growth position. So again, in terms of understanding how that philosophy works, using that risk score as a gauge or miles per hour in a car, as we're trying to capture growth, we're going to be pushing down on that pedal, increasing that risk score and or miles per hour, which could increase risk. But at the same time, if we want to opt for more of a defensive position, letting off the gas could decrease the growth opportunity, but leave us in more of a protected position if we feel risk is elevated. So when we see growth opportunities, we're going to try to capture those. That could be an example of maybe moving into small caps or internationals when we feel a little bit more confident in those areas of the market. When we see turbulence ahead, we're going to reduce our exposure to risky asset classes. That could be specific types of asset classes. That could be hedging our equity positions when markets are close to or at all-time highs, and or putting in, some downside risk management strategies that would allow investors to hopefully try to continue to participate if the market does well, but at the same time be in a position to protect if and when the portfolio and the markets go down. So one of the reasons that I like the Dividend Kings portfolio is the last time the market had a major sell-off, what did you or your current financial advisor do in response? The answer is nothing. Then maybe it'd be beneficial to consider a different approach before the next inevitable black swan event occurs. So, before the crash of COVID-19, when the markets were sitting at an all-time high, in this particular strategy, because of the fact that the market was at an all-time high, we had already hedged some of our equity positions to try to mitigate some of our downside risk. So you could call it luck or skill, but we believe in the active money management approach versus more of a buy and hold strategy. And in this case, what it did with the Dividends King portfolio is it gave us an opportunity to already be in a defensive position as we kind of weathered through the beginning stages of COVID. If we think about it in terms of visual, what we can look at here is the kind of the slide and looking at, when market conditions are favorable, our goal is to try to ride the gains up as best as possible. But again, when market outlooks worsen, to begin to pump the brakes, and as market conditions recover, try to get rolling again. When we look at the statistics, I think this is an area that is important for each and every investor to understand what is considered the normal range of returns. These are what I would call your guardrails, if you will. This is important for you to look at if you're considering investing with Growth with Kings, because again, what we want to do is we want to make sure that we get you in a portfolio that has the ability for you to achieve your objectives, but also matches up and lines up really well with what your comfort level is for investing with risk. So if we utilize the software Riskalyze, what it would tell us is that we have a 95% probability that if you looked at the portfolio, it would be very likely that if market conditions were down, this portfolio could be down about 10.2%. And if and when the stock market is up, it could be up as much as 17.5%. So if we looked at things like 2011, where overall for the most part of the year the market conditions were favorable, it'd be fair and reasonable to say that you're going to lean more towards the growth or the green side. The same would be true as when market conditions deteriorate like they did here in the beginning of 2022. It'd be fair and reasonable if you're in the Growth with Kings portfolio that it could be down in the 6-month time frame as much as 10.2%. The distribution rate currently is 1.86%, and it also has the underlying fund expense ratios of 52 basis points. Of course, for your total expense ratio, you need to consider any fees and expenses for trading in your portfolio and or any management fees and expenses that you have. For full disclosure, be sure to read through your contract with Retirement Guys Formula and or ask questions with your financial advisor so you have a complete and good understanding of all the portfolio characteristics, again, with the goal to make sure that it matches up with what your individual goals and objectives are. A couple of the key takeaways is this is great for people that are looking for long-term growth from an actively managed portfolio. And long-term growth, in my opinion, would be investors that have a 5 to 10 plus year time frame investing. This is a moderate to higher risk level portfolio, depending upon, again, the market outlook. And it's going to use exchange traded funds, mutual funds, derivatives, cash, or possibly individual stocks to be able to achieve those objectives. So let's get in touch. Let's talk a little bit more. I appreciate you taking an opportunity to learn a little bit about the Growth with Kings portfolio. If this portfolio is of interest to you, what I encourage you to do is get in touch with the professional who showed you this video, or you can call us here at Retirement Guys Formula at 419-842-0000. 0550. We're located at 1700 Woodlands Drive here in Maumee, Ohio. Again, I'm Nolan Baker, owner of the Retirement Guys Formula. I appreciate you taking some time to learn a little bit about the methodology in one of our investment approaches, and I wish you all the success in your continued investment approach.